Hello everyone, I am Anita, Assistant Professor at Department of Commerce. The topic is Principles of Cost Accounting from the subject is Cost Control Techniques and Audit. Let's get into the topic is Introduction to Cost Accounting Principles. The covering topics are Cost Accounting Principles, Cause and Effect Matching Principles, Full Costing Objective and Consistency. The last one is Materiality Control. Let's see one by one. Cost accounting plays an accurate role in modern business by enabling organizations to monitor, control and reduce their cost while maximizing efficiency and profitability. To ensure consistency, accuracy and relevance, cost accounting is guided by a set of fundamental principles. These principles act as a framework of collecting, classifying, analyzing and presentation cost related data. They help ensure that the cost information production is meaningful and related to decision making. Unlike financial accounting, which is governed by accounting standards, cost accounting relies more on internal need and managerial requirements. However, two core principles ensure standardization and fearless in cost practice across industries. See the effect and matching principles. One of the most essential principles in cost accounting is the principle of cause and effect. The principle embraces that every cost ensured must be linked to the special cause. In other words, cost should be attained to the activity or product that gentle them. This helps manage, identify with operations are cost incentive and making information decisions on cost control. For the example, if machinery maintained costs are increasing, the company has investigate the underlying reasons and address them directly. Closely related to matching principle, which standards that expenses should be matched with the revenue they help generate. This ensures that the cost assisted with production, the product and services are records in the same period as the income earned from it. The alignment is important for understanding the actual productivity of the business during the special period and avoid misleading financial performance. Next, see the full costing objective, objectivity, consistency. The full costing principle, also known as the charging of cost principle, that all the cost, both direct and indirect, ensured in the process of production must be allocated to the final product or services. Next, the principle of objectivity principle, which requires that all cost data be based on the factual and variable evidence. Next one is consistency principle. Hold that once the company chooses a cost accounting methods, it should be applied consistency over time. The inventory valuation like LIFO method, LIFO method, overhead allocation techniques, these are all. Maturity prudence control. The maturity principle suggested that only costs that are significant, the impactful the business decision need to record in detail. For the example, traveling expenses that do not affect decision making can be grouped or ignored the priority. Next, predicts principle, also called the advice the predictional cost and loss should be anticipated, while profit should only the recordized when they are actually realized. Next, control principle. It used to control the cost data to maintain or control opportunities. It supports the create of cost standards and the analyzing of variance between the actual and direct cost. The conclusion is the principles of cost accounting are essential for maintaining the successful and consistency of cost data. By applying their principles, business or better to manage their resources efficiently, make informed decisions and stay competitive in the dynamic marketing. Thank you.